Hello, welcome back to the channel. What if I told you that there is one category of mutual funds that adapts to the market conditions and also beats the rest of the mutual funds in the long run? Flexicap funds are these type of mutual fund which gives you the freedom of all three: large cap stability, mid cap growth and small cap upside without needing to time the market. Most investors are stuck. They either play it too safe with large cap and miss out on growth, whereas some chase mid and small cap funds and end up riding a roller coaster. But what if there was a middle path? One that gives you growth when the market is hot and cushions you when things go sideways. In this video, I am going to show you why mutual funds, Flexicap mutual funds, might just be the smartest long-term bet in today's volatile market and how they adjust your portfolio automatically. Stick around because by the end, you will not only understand what makes Flexicap funds special, you will also know how to pick the best ones and avoid the ones that quietly underperform. So let's start with the basics. What is Flexicap fund? A Flexicap fund is a type of equity mutual funds that has the freedom to invest in companies across all market caps: large cap, mid cap and small cap. SEBI mandates the Flexicap funds must invest at least 65% in equities, but they have no restrictions on how much should be in large cap, mid cap or small cap. The fund manager decides that based on the market conditions. That's their biggest strength: flexibility. Let me break it down to you in real life terms. Imagine you are driving on a highway. Large cap funds are like a sturdy, reliable SUV, smooth, stable, but not the fastest. Small cap funds, they are like the sports bike, super fast on good roads, but risky when it rains. Flexi cap funds, they are like the smart self-driving car. They slow down when the traffic builds up, speed up when the road is clear, and even change lanes when needed, all automatically. You don't have to do anything. You just have to stay invested. According to Morningstar data, over the last 10 years, many top performing flexi-cap funds have beaten not just the large cap funds but even pure mid and small cap funds with lower volatility. Large cap, think Reliance, Infosys, HDFC Bank, which gives you stability, lower downside risk, tend to outperform during market downturns. Mid caps, think Page Industries, Aarti Industries, provide growth when economy is expanding. Small caps, think Map My India, BSC, explosive returns in bull runs but dangerous in downturns. Now, what if you don't have to choose between these two? FlexiCap funds let you benefit on all the three in just one SIP. It's like having biryani, pizza and gulab jamun all in one thali. And the best part, you don't have to keep checking the menu. The SEF, that is, the fund manager, does it for you. But here's the thing, most investors don't understand what they are holding. They invest in FlexiCap fund thinking it's safe, but then panic when the fund temporarily underperforms or changes strategy. Here's the reality check. FlexiCap funds can sometimes be heavy on large cap when the manager seeks risk ahead. Other times they tilt towards mid and small caps for higher growth. So if you are someone who checks your portfolio every week looking for top returns all the time, you might get impatient. And that's where the mistake happens. And this FlexiCap fund is not for you. The challenge isn't with the fund, it's how we behave when the market goes up or down. So let me tell you a story. There's a FlexiCap fund called Parag Parekh FlexiCap Fund launched in 2013 that took a different approach. While others were chasing hot sectors, they kept a global plus Indian diversified strategy. Guess what? In the long run, they outperform most aggressive mid and small cap funds with lower volatility. Why? Because they stayed flexible and consistent, didn't chase returns, didn't panic. Another example is Kotak FlexiCap Fund. Historically large cap heavy, but during 2020-2021 they tilted towards mid and small caps when the recovery was strong and they delivered. This is what FlexiCap funds are meant to do. They respond to market cycles, sector shifts, economic policy changes and global news. And because they are not locked into one type of company, they are better at adapting. So let's compare four funds: FlexiCap fund, large cap fund, mid cap fund and small cap fund. As you can see, the FlexiCap fund has given us 19.91% returns since the launch, whereas large cap fund has given 16.31%, mid cap is again less than the FlexiCap, that is 19.22%, whereas small cap has given us 25.01% returns. But in 2020 market crash, small caps have fell over 35%, mid cap 30%, whereas Flexicap funds was not that volatile and it has only gone down by 25 to 30%. And most importantly, they recovered faster because the fund managers shifted weightage to the rising sectors as the economy came back. Now that's the adaptability. Just like any other equity mutual funds, Flexicap funds held for more than 1 year, you have to pay the long-term capital gain tax. And the tax is at 12.5% above 1.25 lakhs per year. SIPs works brilliantly with the Flexicap fund because volatility is lower than small caps but returns can be strong. So if you're someone who doesn't want to keep switching between funds, that is you don't want to keeping 70% in large cap, 20% in mid cap and 10% in small cap, Flexicap are the tailor made for you. Set it, forget it and let it grow. Alright, here's the kicker. The biggest reason Flexicap funds are the safe bet is not just performance, it's peace of mind. They save you from the constant FOMO. You don't have to keep chasing the next hot sector, the next small cap boom, or time the market. The fund does it for you. In bull markets, they accelerate. In bear markets, they slow down. When the market is confused, they hold back and wait. That's not just smart investing, that's the long term wealth creation with minimum anxiety. So, if you have to choose only one fund in your portfolio, FlexiCap fund is the best choice for you. So, let's wrap it up. FlexiCap funds invest across large cap, mid cap, and small cap funds. It offers adaptability in changing markets, are managed actively to capture trends and reduce the risk, historically deliver strong and consistent returns, and it works great for SIP investors who wants hands-off investing. And they are not magic. You have got to give them time. Let the flexibility play out over the years, not months. If you want to ride the highs of the market without crashing in the lows and don't want to play fund manager yourself, then FlexiCap is your go-to vehicle. If you want to keep only one fund in your portfolio, then FlexiCap is your go-to vehicle. Just create a SIP in Parag Parekh FlexiCap fund or Kotak FlexiCap fund for the rest of your lives and you are set. Thank you for watching. Please like, subscribe and share the video if you have liked it. Thank you.